Here we go right now. Second quarter investment banking revenue, $3.45 billion, up 26% year on year. Trading revenue, $4.9 billion, the estimate $5.02 billion. Little lighter there on fixed income. Sales and trading rev comes in at $2.32 billion, the estimate $2.49 billion. That's where the lightness comes from, because we're firmer just a little bit on equity sales and trading revenue, $2.58 billion, the estimate $2.53 billion. Second quarter net revenue, $15.39 billion, the estimate $12.43 billion. Second quarter EPS, $15 and around about 2 cents. Tom, a lot of numbers there to pour through, but just to give you some of the highlights so far from Goldman.
Yeah, and they put right up top the quarterly dividend to go to $2 per common share. John, this is what you're going to see. And on use of cash, this is what matters. A first look, Sonali, Basak, what do you see?
Yeah, absolutely. Trading is still that engine that underpins Goldman Sachs. So the trading coming in a little bit lighter than expected will be a disappointment for all of Wall Street, really. Again, we'll want to see where the market share gains are in a normalizing market. Fixed income, just like JP Morgan, just a little lighter than what everyone expected. The consumer revenue is also just about in line with last quarter. So there will be questions around how fast that consumer bank is growing for Goldman Sachs. Asset management revenue, higher, right? So we are seeing Goldman rise with the markets. When it comes to asset management, remember, they are trying to grow when it comes to private equity, private debt, as they change the texture of their asset management business within Goldman Sachs. We'll also be looking for costs, John, as we see over at JP Morgan. They're higher than we are expecting. So how are people faring in this new environment?
The stock comes in about a third of 1%, Sonali, on Goldman in the pre-market. Not a big move. Getting some commentary from Mr. Solomon over at Goldman Sachs, the CEO. Clients still facing challenges in overcoming the pandemic. Sonali, we're still working through this, aren't we?
We absolutely are. Another fun fact, over at JP Morgan, you saw credit card loan balances flat. So you see people still not really taking out loans to get through this pandemic, really saving more, shoring up their balance sheets. It's interesting to hear him say that, because remember, their investment banking revenue in this set of earnings is coming in greater than expected. So as far as their corporate clients go, they are certainly active, right? We saw Goldman Sachs for the first 6 months of the year bring in M&A volumes over $1 trillion, faster than they ever have in history. So again, gaining from mergers and acquisitions, but trading is still a bigger piece of that pie.